So somewhere 2016, right after completion my education, I went into some of this side hustle. I tried to get in contact with some of these small and medium scale enterprises which is in operation. And for some reasons, we were trying to help maintain some of their proper bookkeeping records. So I went out in search, particularly in Accra, Ghana, around the vicinity in Kasua. So for those who are watching us from Ghana, I know most of you know where Kasua is. And I met a woman in the market who happened to have opened a shop not long ago. She was very excited. The husband has helped her to set up these small and medium scale enterprise shops. But to my dismay, she doesn't have any bookkeeping record. Most of her transactions went directly into her personal account. So for some reason, she felt like she's having plenty money kept in her possession. And to my dismay, she wasn't having any issue that this is happening to her. And this is the root cause of many of our tax mistakes that people start making in their life. They start a business full of excitement and they end up merging most of their business funds together with their personal funds. And eventually, when the business has to be separated from their account, later down the line, it becomes an issue for them. And today, we are joined with a chartered accountant who is our regular guest here on this channel. His name is 𝗕cie, and he's going to throw more light on some of the top tax mistakes that people make and how this scenario that I set, for instance, can become a major problem when it comes to the tax issues here in our life. So irrespective of your geographical location following us, we are going to delve into it. So I'm going to first introduce my guest here, who is here with us. Mr. Anyas, welcome to today's session.
Thank you for having me, Mr. Mubarick.
Okay, Mr. Anyas, nice meeting you. I know we had a conversation in the past regarding other topics. So today we want to delve much deeper into some of the top tax mistakes that people make. And I'm very sure that you are going to throw more light on this topic for us, for the benefit of our audience. And besides, when we are done with that, we'll also look at how tech can help address some of these tax mistakes that is happening in our daily lives. So, Mr. Anyas, can you help us understand what tax is?
Yes, taxation is usually a payment that you do to the state, which is mandatory, and for individual and businesses. And the payment which has been established by law to be paid by individual and business to the state. So taxation has so many roots, but taxation started very long time, and as far as you know, during the biblical days and ancient days, that is when taxation started. So taxation has been here with us for centuries, and up to today, governments are still using taxes as their main source of revenue for developmental activities in their various countries. So tax is literally the mandatory payment that individual and businesses are assigned to make to the state based on the activities that they are undertaking.
Okay. So, Mr. Anyas, that's a nice explanation. And I believe our audience, you are following us. And in the course of time, if you have any question, you can quickly leave it in the comment section, and your question might be featured in our next live series. and we are always taking questions, and we'll feature it and answer it exclusively here on this channel. To some businesses, they think like tax is like a disturbance to them. Do you think tax is a punishment to businesses and small, medium enterprise businesses?
Tax is never a punishment, and definitely nobody likes to pay tax in their life. Whoever you ask about tax, the moment they hear tax, it becomes something else. Pay money out of their business or out of what they have. And in that essence, you will say that tax is not a nuisance, but individuals are finding it difficult to comply, meaning to pay. And as I said earlier, because tax is a law, and anybody who is involved in an activity that has to do with tax, you must comply with what the law has ordained or what the law has said. If not that, you will be in non-compliance or you will be against the law. And what happens is that you find yourself wanting with the tax authorities. So payment of tax is not an easy thing for businesses. Nobody, even individuals, nobody wants to pay tax. But because it's an act of law, and which makes it mandatory for individuals and business to pay tax, it becomes something which is mandatory or obligatory on every citizen to fulfill that kind of requirements by the law. So yes, it is essentially something everybody would have to do, because that is what government actually based to undertake all developmental projects that you find: the education, the roads, health, everything that you think about. Majority of it comes from the taxes that are collected from the citizenry. And if not, if the government does not result in getting the money from the citizenry, then it has to go out of the country to go and borrow. And when you talk of borrowing, it comes with a lot of conditions,
Yeah.
which would actually make the economy to go through a lot of problems. So it's better if your government is able to raise taxes very well within your country to be able to undertake any developmental project that they have. If not that, if the taxes are not enough, it's either they look for a way to raise within, or they go outside to borrow, or borrowing within. And borrowing, they definitely would have to come with interest. And the interest payment would accumulate a lot of burden on government, which will make it difficult to actually undertake. Governments across the world are actually suffering because of debt, and economies are actually suffering because of debt. And no government would want to push itself to the burden of payment of debt. So if your taxes are enough to undertake whatever they want to undertake within, there is no need to go for any loan from anywhere. So it is
Mr. Yes,
important that
hold on here. I want to find out what inspired you to specialize in helping SMEs or any businesses with their tax and accounting policy. I want you to explain this to our audience so that they will know whom we are speaking with properly here.
Actually, the inspiration came from the previous experiences that one has gone through. Because after school, definitely you would have to find a place that you would practice. And aside the practice, you would also have to go to the field to engage with SMEs and to help them solve their problems. So I realized it is something that are so common and simple mistakes that people are making, which they shouldn't be making when they come in contact with somebody who really understands the tax laws. So in going through this, I realized, why not take the opportunity to actually educate SMEs and individuals about tax issues, and also help them be able to be compliant. So this is the actually genesis of me going into consultation and also to help SMEs actually become compliant with their tax issues.
Okay, so and what do you think are some of the common misconceptions that businesses have about tax?
Yes, I stated earlier that they
Yeah.
see it to be nuisance because paying, they definitely understand that giving money, paying money out is a problem. Nobody would like to take part of the what they have to dash it to the state.
Yeah.
And as a result of that, people see taxes as nuisance. But it's not always the case. There are some of the taxes like sales tax or consumption tax. These kind of taxes are usually paid by the customer. The burden of the payment is on the customer who patronize the goods or the services you are engaged in. So at the end of the day, not your business which is bearing that burden, but rather the customer who is coming to pay for your goods or your services. It is the one that is going to. It's only at the end of the day when you finish, when you make a profit, then government will also tax the profit that you have made. But essentially, most of the taxes are the sales tax and also withholding taxes in our that we need to comply with in our activities, because some of the taxes are literally borne by the person that is going to buy your activity or your goods or your services. So at the end of the day, it is only incumbent on you. It is required of you, the business or an individual, to comply with the tax laws to ensure that at the end of the day, you are able to fulfill your tax requirement. So the misconception here is that people think it is their money that they always have to use to pay tax. It is not always the case. It is only when you make profit that you pay tax to the states. But most of the taxes are actually borne or are paid by the customers. And even the one that you make at the end of the day, you would anticipate that it's part of your profit, and the part of the profit is what you've gotten at the end of the day when you have deducted all your expenses from your sales or your revenue that you have acquired. So at the end of the
Wow,
day,
interesting.
the taxes are not targeting to businesses,
Yeah.
but rather which actually goes to people that consume your services or
Okay.
your goods.
Okay. So what I will be asking now is, since you've already started, I want us to talk about some of the common mistakes you've seen small businesses are making in regard to this area of tax.
Okay. Uh, there are, as for the mistakes is plenty. They always
Interesting.
commit petty mistakes. And in my line of activity, I always come out. I always meet people committing the same mistakes. But what happens is that we do uh, take it upon us to educate individuals and small businesses in order not to fall into the trap. What happens is that people without understand that the law is the law.
Yeah.
Tax laws are actually passed by the states, and all over the world, the tax authorities are also taking those taxes on behalf of the states, and they become those that implement the tax laws. And in most cases, you find out that people that establish business don't even understand what they have to do to fulfill as part of what they venture into it in accordance with the tax laws. It is very, very necessary you understand what you are going into it, what is the requirement of the law, what is the tax issues about what you are going to do. All these are things that you need to understand before venturing into it. Some will literally enter it because everybody is doing it and find out that there are issues that they have to deal with regards to the taxes. And it becomes a problem for them because they never anticipated that something like that awaits for them. And it is very necessary for you. This is where it becomes very necessary for you to actually get the understanding of what you are doing and also know the taxes that will be related to whatever it is, so that at the end of the day, you become compliant. let's delve into some of the mistakes. As for the tax law, when you commit a mistake, the tax law does not regard it's a mistake. Is ignorant of the law is not there is not an excuse. When you are ignorant of the law, you cannot go
It's
to the
not
law
an
court or the
excuse.
tax authorities and tell them that you do not understand that the taxes are supposed to be on that way. It's ignorant of the law is never an excuse. So what it
Wow.
means is that when whatever you are going to do, you have to find out what the laws are saying in regards to whatever activity you find yourself in. In the first place, the law make it mandatory that the tax laws makes it mandatory that you would have to keep a proper records. The proper records is what would actually give the tax authorities to understand what you are doing, and at the end of the day, to understand how much tax you are due to the state, you are due to pay to the state. And this is very, very necessary. You will go and realize that there are some businesses, because he thinks that it is he established the business himself, he can do it without even record keeping. Meanwhile, this is a very big mistake you are making. When you find yourself with the tax authorities, probably by then it's already too late. You have already committed a mistake. To you, it's a mistake, and to the tax authority, it becomes an offense. And ignorance of the law, as I said earlier, is
It's
not an
not an
excuse.
excuse.
And the laws would also be applied to the latter to ensure that you do what is right.
So
And
the question
in this
now
case,
that
if
I will
you
be
don't,
asking, the question that now I will be asking is, do you think these mistakes keeps on happening year after year because of just ignorance, or partly is because of illiteracy, or you think like people are just not ready to abide by the law? Why do you think this mistakes keeps on happening year after year?
yes, some I would say is ignorant of the law, and some are not willing to actually do the right thing, because they think that at the end of the day, if they keep records, the tax authorities will come to them and ask them to pay the right taxes. So it
Okay.
is partly something that is a smart way they can outweigh or to avoid paying taxes. Actually, tax avoidance is that we have tax avoidance mechanism that one can put in place in order to avoid payment of tax. But tax evasion is criminal, where you intentionally do things to ensure that you do not pay the rightful tax to the state. That one, all over the world, it is criminal. And at the end of the day, the tax authorities will come after you, and you would have to meet the rigors of the law. And the law does not care, you do not understand it, or it is you are ignorant about it. So at the end of the day, you suffer the penalties and interest that you are supposed to pay to the state.
I
So
know, I know,
at
I
the end
know.
of the
I'm putting you to the tight corner now. Do you have any
Mm.
real-time scenario that you've encountered someone who had found himself or herself in a tight corner trying to be playing smart, but name withheld, don't mention anyone's name? Have you come
Sure,
across any
sure.
of these issues before in the past?
Actually, it is something that has been coming regularly on regular basis. You come across them. Some of the examples, let's say somebody established a business. When you establish a business in accordance with Ghanaian tax laws, you would have to register with the tax authorities. That is the first thing. That is even the first offense. If
Okay.
you are operating without registering with tax authorities, it becomes an offense. So the tax authorities would not know that, because you don't know that it is an offense. You don't. At the end of the day, when they get you, you would have to face the law. So in the first place, you need to register with the tax authorities so that they will officially understand what you are into, and also explain to you how the law says you should go about your things. So the moment you register with the tax authorities, you are being given a tax identification number, which is popularly called the TIN number. So at the end of the day, this tax identification, they will put you on a tax portal that you need to file your returns on timely basis, usually monthly over here in Ghana here. So on monthly basis, you need to file some of the popular taxes such as the consumption or the sales tax, which we call in Ghana here VAT, and you also have some of the withholding taxes that you need to pay, which is monthly also. And at the end of the year, you would also have to also pay your company tax. So people, let me say, whether ignorantly or by willingly, fail to file their tax returns. You can't go to the tax authority and tell them that I have forgotten, I have not filed my tax returns. The moment the month ends and you are supposed to file your returns and you did not file, automatically the system will start generating a penalty, and interest will be accumulated on daily basis. When you fail to file your returns, there will be penalty and interest will be accumulated. And some of these things are something we come across on regular basis, on daily basis. The person will tell you that I have gone there to go and open I register with them. I didn't know that I'm supposed to file my returns. It means they didn't talk to anybody. So they don't even know what what is required of them. So what happens is that if you do not file your returns, it becomes your business would end up paying a lot of penalties, and also interest will be accumulated on the penalties that you are supposed to pay. Assuming one is supposed to file for VAT every month, at the end of the you have up to 30 days of the ensuing month to file your VAT return, which is popularly known as the value added tax. So if you didn't do it and the time lapses, you didn't file until the time lapses, what happens is that the system will automatically start calculating for penalty. And the penalty for not filing on that day would be accumulative with interest. And this, by the time you realize, if you are supposed to pay, let's say, an amount of 1,000, you will end up paying more just because you didn't file at the right time. So some of these mistakes.
We will go back to the mistakes again. In the beginning part of the this session, I had an encounter from my own personal story with a lady who newly started a business, and she wasn't keeping proper bookkeeping records of her business when she started. Meanwhile, she felt everything that comes into her account is hers, since it's her business. And do you have any addition to make or any clarification to make to these business owners so that they will be able to know how poor bookkeeping has any impact in this regard? Because this woman felt like the business is her own. So if she's earning and she's making profit, it's wise that it adds up to her personal money in the bank. So her bank account is one, and every other transaction that comes to her account enters into a personal account. So can you throw more light on this to clarify?
Yes, it's actually required by law that when you go to register your business, it is required by law that you keep records, proper records of accounts. These proper records are the basis that the tax authorities would use to calculate the tax that you are supposed to pay. So if you think the business is yours, you do not keep proper records, already you are violating the law. And even your own business, if you happen not to keep proper records, how would you be able to know whether you are progressing or you are regressing? Because it is the record that you keep on that basis that you understand how much you are, whether you are making profit, whether you are making loss. If you are going to prepare your profit and loss, It is based on the records that you keep that would help you to be able to understand whether you are making profit or you are making loss. If you want to prepare your cash flows, your balance sheet, it is based on the record that you have that you will be able to prepare your balance sheet. And if you want to prepare your cash flow statement, it is based on the records that you have that you would understand how liquid your business is. So if you do not keep these records, how would you, even yourself will not be able to understand what you are doing? In fact, it's part of the problem that most of the business that collapse under 1 year. That is one of the cardinal problem. That is one of the biggest problem. People think that they can just have everything off head, but it doesn't work like that. You are supposed to keep proper records so that you track your activities and understand what you are doing, so that if there is anything going on wrong from somewhere, you can quickly address it as a result of the records that you have. But you don't have the record. If things are even going bad, by the time you realize it's already gotten out of hand and there is nothing you can do. So it is not only required by law, it is the business itself that actually needs bookkeeping to survive.
So it's not easy. So we are going to keep on with Mr. Nyas. So let us quickly make some additional inputs so that Mr. Nyas will relax a bit. You know, the conversation is going to be much more deeper than you think. So we're going to keep on, and we're going to show you another phase on how you can use technology in particular to help solve some of these problems. So irrespective of the geographical location that you found yourself, you can always get the best out of this conversation. And if you are joining us now, you can always leave your question in the comments section. In the course of time, this question will be addressed. And if time didn't permit us, your question will be featured in our next live series. And we'll take your question, answer it, and make a complete topic out of it so that you get the benefit of getting the answer from the horse's own mouth. And we're going to make sure that we are going to transition to see how tech and accounting can be a solution to everything that you need to know around taxation. Because lately, most people have problem filing their tax because of the manual system that of bookkeeping is, or because of the manual system of their transaction is. So we're going to see how, with the help of technology, you can easily be able to split your account information just by knowing or keeping track of the kind of transaction that you are making on this, whether it's for personal transaction or it's a business transaction. And if this is a business transaction, which category does it belong to? Or if this is a personal transaction, which category does it also belong to? So we're going to bring Mr. Nyas back again to give us an insight on how he thinks tech can start giving a solution to some of these mistakes. And whilst he's doing that, he'll also be adding up to some of the mistakes that he thinks is mostly common to businesses, and how he thinks the tech can also offer solutions to this. And as a software engineer, I'll definitely also add my voice to this important topic that we are discussing. So we are looking at how accountants, a chartered accountant, for that matter, the professional accountant, can help you alleviate some of these tax mistakes that you are making, and which at the end will make you go contrary to the law. And you know, ignorance of the law, in the words of my guest, is never an excuse. So we're going to make sure that we bring him here back again, so he'll continue to add his voice to the myriad of voices on this platform. So Mr. Nyas, welcome back again. So you can continue with the mistakes that you notice businesses are making and offer recommendations on what are some of the tech solutions, or what are some of the accounting solutions that you think can be possible, so that when you bring these things on board, businesses will be able to survive without flaunting the tax laws and the tax regulations?
Exactly. You realize earlier we're talking about people keeping proper records of accounts. So the technology, when you automate your system, when you employ the services of a technology, what it means is that your system, that there will be a system that you operate. This system will help you to compute these taxes that you are supposed to do without waiting until somebody comes to you to come and tell you this is what you have to do. So there are so many accounting softwares that are out there, and it's always advisable you speak to somebody who is in that field, so that the person will recommend, or a tech person who can actually help you with the appropriate solution that suits your working environment. And when we talked about consumption taxes, these consumption taxes, which in Ghana here popularly called the VAT, this VAT that you are supposed to pay, assuming you have, let's say, 1,000 transactions in a month. So if you manually want to compute this, if you omit one of them, your work or your tax will become incomplete, because there is some that is out. And if you make a mistake and adding one more than once, you'll be paying more. But where you employ the services of a technology, this technology would be able to calculate each transaction and the exact tax that you are supposed to pay. So at the end of the day, when the term is due, you only need to see the total payment that you need to go and make to the tax authorities, and establish your way of paying, whether through bank, whether going there physically, whether they have their portal here that we are all over the world. Tax authorities have a way of collecting taxes. So if you happen to be in Ghana here, you go to the tax portal, tax payers portal, then you will look at the tax that you are supposed to file, then check the amount that you are supposed to pay, go to the tax portal, fill in your details, and at the end of the day, you can make the payment even on the portal without even physically going to the tax authorities. So it is important that you employ a technology that would aid you to know the complete amount that you are supposed to pay, so that you don't end up paying less than what is due, because the remainder can still be a tax offense. Because if you do not pay total, the complete, what it means is that what is remaining will become, there will be penalties that can accrue to that, and which you are liable to pay at the end of the day. We also have, let's say, some withholding taxes. These withholding taxes can be employment withholding tax, can be your expenditure withholding tax, can be your any type of this thing related activity that you do. There are some withholding taxes that you are supposed to pay. For example, let's take employment withholding taxes. We have pay as you earn, which is popularly known as the payee. This kind of tax is a graduative tax that an employer is supposed to withhold from the salary of an employee and remit it to the state by the 15th of the ensuing month. So at the end of the day, if you happen to have an automated payroll service, this payroll service would automatically calculate all of these taxes for you without you even requiring somebody to come. And the moment you just input the data, employment, the payroll into the system, it will automatically generate this kind of tax for you, so that at the end of the day, you go and pay this tax peacefully. And if not, you fail to have a system that would, you can probably say, okay, I will do it myself. Fine, it is good, you can do it yourself. But any mistake that you commit into that, remember that ignorance of the law is not an excuse. So at the end of the day, this can attract penalties and interest that you would pay. Instead of paying, let's say 500, you would end up paying more because you have not accurately compute the tax that you are supposed to remit to the state. And also, we talk about the withholding taxes. Some of the common mistakes that businesses, individual and small businesses commit when it comes to withholding taxes. These withholding taxes are taxes that businesses are supposed to withhold when they are making payments to individual and companies that they are dealing with. So we have example like the PAYE, which is the employee withholding tax. We also have the goods and services, and also works. These are, we have so many type of withholding taxes, but the common ones that all businesses are engaged in, it have to do with the employee withholding tax. This employee withholding tax are employees that work for a company or a business. At the end of the month, you pay these people. So when you are paying them, you are supposed to withhold from their salaries and remit to the state. So this takes us to your payroll or your HR issues. At the end of the month, you will definitely pay your employees. And when you pay your employees, you must adopt a technology that will help you to accurately compute and help you to remit these kind of taxes. Because you can do them manually though, but the chances of making mistakes when you do manual computation are very high. But with the help of a technology, you just have to input the details and the technology will give you out the required tax that you are supposed to pay. The common mistake that people make is that some the classification of how they are supposed to make when it comes to the employee, the PAY or the employee withholding tax. This kind of withholding tax, as I said earlier, is about the tax that you pay to employees that you work with. Assuming you are paying, let's say, casual workers. Casual workers, you are only supposed to apply 5% on the gross amount that you pay to these workers. In when you come to in Ghanaian tax laws, you are supposed to apply 5% of the gross amount that you are paying to these employees. And when you are coming to also compete for your staff, these are the regular people that employees that you are working with. We have what we call the PAYE, which is the pay as you earn. This pay as you earn is a graduative rate tax system that you apply on the employee salary. So at the
Wow.
end of the day, if you employ the benefit, if you are able to automate your system, you just have to input the details and automatically you get how much you are supposed to pay to the state. Making mistake of paying less from this definitely would have to attract a penalty and also an interest to the penalty. So we also move to a popular one, mistakes that some of the business are making when it comes to their tax issues. The expenditure treatment when it comes to the law. When it comes to the law, you are supposed, we have what we call the residual deduction rule. The
So, Mr.
residual
Yes,
deduction
let
rule.
me find out from here. I want to find out, do you think technology will help in this point that you are coming to make? I want you to make it very clear
Yes,
because some of our
yes.
audience following this channel, they are following a tech how-to channel, and most of them are kind of perplexed on how technology will be able to help solve this kind of problem that they are facing. So kindly highlight
yes.
it to our audience.
When you employ the benefit technology or when you automate your system, what happens is that the system would clearly show you expenditure that are personal and expenditure that are business related. And the residual deduction rule is is talking about with the law. So at the end of the day, when you automate your system, the system would automatically show you how much you are supposed to put, you are supposed to pay, actually put in your expenditure when it comes to the technology. Yes, but what happens is that when you understand that expenditure is how do you call it, is personal, you know that it is not supposed to be part of your records. It is not supposed to be part of the business related. You see, and some expenditure are of mixed. Let me give an example that you are living in your house and it is the same house that you are using as your warehouse. It is the same house that you are using for businesses, or you are using electricity both for some of the electricity is used in production of goods, and others is also because you are living in your house. Some of the part of the electricity bill is for your personal consumption, that is your home use. So at the end of the day, when you have a system that will track this and completely calculate it and accurately compute this for you, you do not even need an expert to do it for you, because the moment you just input the system, it will ask you where the part that is personal and the part that is for business. So when you input the business one, then the system will recognize it as the business expenses, and the one that is personal, the system will disregard it, because according to the law, the residual deduction rule, your personal expenditure must not be part of your business expenditure, because the residual deduction rule is saying that all your expenses that will be accepted by law must be wholly, necessarily, and also exclusively for business purpose that you incur those expenditure. If they are not of these three, it means you cannot add them as the expenses that you make. So your automation system would help you to be able to track and the appropriate expenditure to your business, and the one that is personal, because the shared one too, when you automate, the system will automatically compute it for you. Assuming you are using 2/3 of your premises for your business, the 2/3 of your business, your property, the system would acknowledge that if you are is a shared premises, at the end of the day, you would have to compute for your depreciation in tax law, which is called the capital allowance. And it must be apportioned by the ratio of its usage. I mind you that residual deduction, like the ones that are not for business purpose, cannot be added to the business expenditure because they are personal. So with this, at the end of the day, the moment you input your data, the system will ask you which one is personal and which one, and the ratio which is personal and the ratio which is for the business. So it will complete and also compute for the depreciation or the capital allowance for you, which your business will be able to use at the end of the day.
A quick reminder to our audience: you see the reason why you needed the service of an expert who is specialized in this field, so that the expert will help guide you on how you will be able to reduce your tax expenses legally, because tax is mandated by law for us to pay it to the state, but paying it the smartest way is what is also very important, because some of you ended up making the mistakes, and the mistakes that you make you end up paying more tax to the state, and these mistakes could have been avoided. So when you have the service of an expert who is in the industry and who has known the ins and outs around everything, he will help you, whether in your private life or in your business life, or even as a large company, to be able to minimize the tax that you pay out to the state. So as I said earlier, always the email address to our guest is in the comment section and is in the video description. You can always reach out to him and he will be ready to assist you. This is the series or the segment where we bring tech and business, marry it together, and this area is around the fintech area. So the financial technology, where we see how tech and the finance will merge together to solve your daily problems. So irrespective of your problems that you are having as a company, you can always bring it to us and we will be ready to assist you. So you can always reach out to us, and if you have any question too, kindly leave it in the comment section and we will address it. In the course of time, we can also feature your question exclusively in our next segment. So kindly keep your questions coming and it will be addressed in real time. So back to Mr. Anyas, kindly continue from where you have paused.
Yes. So with the residual deduction or the expenditure that your expenses that you make, the application or automation of your activity would actually go a long way to help you make a smooth or an accurate computation and also additions of your expenditure together. So at the end of the day, the final payment that you do after you finish, after you when you make profit, because always the authority would assess you and show you the amount that they expect you to pay during the period the year that's under review. So at the end of the day, these assessments are supposed to be paid quarterly. In some jurisdiction, you are supposed to pay them monthly. In Ghana here, you are supposed to pay them quarterly. And in some jurisdictions too, they pay them annually. That is at the end of the year. So with all of these things, when you happen to automate your system can alert you on the period and also the accurate amount you are supposed to pay. Because when you keep proper records and all your information goes through your system, at the end of the day, the system will automatically compute for all the taxes that you are supposed to pay, and also your company tax that you are supposed to pay, which I explained earlier that the payment is either monthly in some jurisdiction, and in some jurisdiction you pay them annually, and in some jurisdiction you pay them quarterly, and some jurisdiction you pay them biannually, which means half a year. So depending on wherever you are, the automation of your system will allow you to accurately compute the amount you are supposed to pay as taxes. Not necessarily even paying taxes, because on this company tax, you only have to make profit before you pay these taxes. So if you happen not to make profits, it means you will not pay any tax as at that time. Some jurisdiction even gives you.
So the question now is, if you have to make profit before you pay tax, what happens if you run at a loss? Will the state compensate you in any way, since we share the profit together?
Yes. When we have something we call carry forward losses, and that is the reason why I said, depending on some of the industries in Ghana, in the Ghanaian tax law, you can carry forward your loss up to 5 years, and only carry forward up to 3 years. But generally, the carry forward losses, when you make a loss this or ensuing years profit that.
Yeah, so guys, a little moment. I want to pause here so that my guests will relax a bit, and I think my guests will need to relax. So guys, you don't have an excuse not to subscribe to this channel. You can see the kind of information our guest is giving here, and it makes you more enriched and more informed, and he gives you with the needed information that you needed to know around this whole industry. So we're gonna transition back our guest to the segment so that he'll continue. He has paused on the carry forward losses. I asked my guest on if when I make a profit, I have to pay my tax. What if I run at a loss? Will the state take off some of the losses that I made, since we share the profit together? So, Mr. Anyas, you are here again.
Yes. Exactly. When you make a loss in some jurisdiction, you are allowed to carry forward these losses for up to, let's say, 1 year, 3 years, and in some industries up to even 5 years in Ghanaian tax laws. And in some jurisdiction, you would, yes, depending on where you find yourself in some jurisdiction, that is the reason why you need to speak to an expert when you are
Very
in the business,
important.
because at the end of the day, you would have all benefit of understanding what tax issues you are going to face when you are in the business you happen to find yourself, in the industry you happen to find yourself. What are your tax obligations and how you be able to remain compliant, because the only way to save yourself is to be compliant. Being
Yeah,
compliant means you have to satisfy your tax obligations to the state, because
yeah,
anybody who is not compliant would end up facing the wrath of the laws, which probably it will make things difficult for you if you do not abide by them. So I would advise that any business will be compliant, because when you are compliant, at the end of the day, you operate with confidence. You
yeah,
operate because when you understand that you contribute to the building of the state, the confidence that you carry along would always let you understand that yes, I am here, I am operating in the business. It is my taxes that are used in governing the state. So the
yeah,
confidence with which you can operate, and with which there are some even places when you are compliant, you are given some sort of when you pay your taxes, there are some, in some jurisdictions you are given a rebate of your taxes. You
yeah,
happen to pay in some years, they give you a rebate of your taxes. So all of these things are advantage. But when you happen to when they realize you are not being compliant, there is no way, if there is any benefit from the state, you will get it, because
yeah.
you are not a compliant business. So it is very, very necessary for everybody to understand that compliance is only the way that will make the work easy for you. But any other things would end up having problems for you.
Yeah, yeah. Any other things will end up having problem to you. And guys, the network is giving us a problem. We lost Mr. Anyas temporarily. We will try to reconnect back to him and see what is happening again. So thank you very much for adding your voice to the myriad of voices around the globe. We are always excited and we are always happy that our guest is here with us to help throw more light around this area, so people like you and everyone who is here will get the benefit and enjoy what is happening to the tech space, especially the fintech space. Heavily taxed obviously is not an incentive to most of us. So our guest is struggling to connect with us, and we will try to reconnect with our guest and bring him on live. So if you are here, you can always follow us. We are always ready to assist each and everyone who is here with us. So you can bring your question in the question and we will be ready to assist you. As I stated earlier, will AI be able to have an impact in your tax calculation, and will AI has any ramification to offer in tax calculation? And the answer is obviously yes. AI definitely will be able to aid you in having even the template that you can prepare and be able to calculate some of this tax. And AI will even offer you with some advices that you need in order to make your tax calculation much more smoother and easier. But the question is, each country has its own peculiar policies when it comes to its tax policies. So you have to know the tailor-made tax policies that is peculiar to your country in order for you to make this calculation possible. And AI will not be able to give you in real time the updated policies in your country. So you have to then come back to the service of the professional to look at your tax policies peculiar to your country and be able to calculate it professionally to you. Our guest email is always in the video description. and you can always reach out to him. In the event you are having problems reaching out to him, you can also reach out to this channel email address, and we will be ready to assist you. You can also join our Telegram community or Discord community, where we have thousands of people who are our fans, and they keep on bringing their questions, and we are also constantly helping addressing each and everything that they needed to know. So this is never going to finish. Tax is an obligation, and you have to follow the tax laws that you needed to follow in order for you to survive as a business. So we'll continue adding our voices to the myriad of voices reverberating around the globe. And the next question is, what is the difference between tax filing and tax planning? So you have to always plan for your tax before you file it. That is the basic difference between them. So you have to start planning on how you are going to pay your tax by first making sure that you get every information that you have intact. So first you need to get the information that you have regarding your expenses. You also have to make sure you have the information that you have regarding your income. So if you have business and you are the boss and it's an SME, there is the probability that your business expenses and your personal expenses has the potentiality of colliding together. So make sure you have the two of them separated by just having this simple workbook. So you can have your personal expenses column and also have your business expenses column. And by having these two, you'll be able to calculate the total expenses for your business and the total expenses for your personal expenses. And also at the same time, make sure you have your business income column, where any profit that you are generating, that you are calculating it in real time, and the purchase that you are making, you are also calculating it in real time. So these are some of the things that involves in planning your tax activities. So at the end of the day, when you are to file your tax, the tax professional will look at the kind of information that you have so far, and by virtue of that will be able to tailor-made the tax amount that you need to file in as a tax return. And this information will keep you organized, will keep your business organized, will keep even helping you to make a proper adjustment and the kind of any kind of needed information that you needed to do here. So we'll keep on checking the comment section in the course of time. If any of you have any question, you can always leave it in the comment section and we will be ready to assist you. And the next question is, how do digital tools help in tracking deductible expenses automatically? So digital tools like QuickBooks and the other tools, we are not here to make any advert to any tools that is in the system. When you have any tool and you want to promote it, you can always reach out to us and we'll be ready to assist you. You can sponsor this video so that this video will reach out to the wide audience. And there are tons of digital tools that you can rely on, which will help make your tax deductible information very much easier. And this information will be much easier, especially when you have it in line. So digital tools are more easier to make your tax calculations much more smoother for you. But you still need the service of a professional who look at the kind of tailor-made policies, tax policies exclusive to your country. And it will be possible for all these things to be in line. So we are going to see whether we have any question in the comment section. And in the event of no question, we'll wrap up this topic that we have. And in the course of time, we'll try to look at whether we'll be able to bring some of the next information that you needed to know in the next topic. So we are looking at how business and the professionals in the other field, so the technocrat in the field of the business realm, accounting, the finance, and the tax aspect, and how technology comes together, marry the two to be able to solve your business solutions. So here at TechHow-to, we are taking a next step in helping you solve some of the problems that you have regarding your businesses. And I hope you are finding value and you are getting the best out of anything that we are making here. And how can tech tools help with filing deadlines, especially the VAT submission? Here in Ghana, we have the consumable tax, which is the VAT. And when you are going to pay your VAT, we often use the tech solution to make things much more easier to you. So in the course of time, if you have any question, you can leave it in the comment section, so we will be able to address it to you. And if there's no question, we will highlight some of these questions in the course of time, so that those questions will be heavily addressed to our audience. And thank you for joining us. Expect us again in the next series. And this is a series where tech meet business in addressing solutions that you often have in your daily activities. We are here with you and will keep on giving you value and keep on giving you the needed information that you needed in order to survive as a business in this realm time. So thank you for being here and see you at that time. This is Mubarick MD, a TechHow-to founder and who is also a software engineer. You've seen me creating videos here for some time, and now I decided to show my face, and the next phase is to take this channel to the next level. So if this is your first time to this channel, just kindly subscribe and turn on the notification bell so that you see many content like this in the future content. Thank you very much. See you at that time.